Wow, well, it's been one crazy week in the markets this week. One might even say it's been historic. So let's have a good chat about some of the things that have happened and what this means for your portfolio in terms of both risk and reward. Well, hello everybody and welcome to Trending Thursdays. My name is Susan Hayes-Culleton and it is my absolute pleasure to be here with you today. I am Managing Director of VectorVest Europe and also I'm the host of Fantastic Female Fridays. But of course, ordinarily, I am not the host of this show at all. It is your fantastic Glenn Tompkins. Now, he can't be with us today. He will be back to you again next week with lots more stories and so on. So, to those of you who haven't met me before, as I mentioned, my name is Susan and I have been working with VectorVest. Would you believe this is my 10th year? I may have met some of you before, whether it's on Fantastic Female Fridays, or maybe it was the recent 2-day Tampa Summit, maybe it was the VectorVest Summit that was held before Christmas, or a variety of other times. If it's my first time to meet you, it really is a joy. Also, as well, in terms of my background, I'm a CFA charter holder. That means that I'm a chartered financial analyst and I am trained very highly in analysing stocks. And of course, what we're going to do today is discuss a range of themes and also naturally turn our attention to the VectorVest system to see what stocks fit in with those themes. Now, first thing I would love to do is I would love to hear where you are tuning in from. So great to see here. I have you up all over here on my screen. So maybe just to make sure that we're all okay, up and alive and kicking, you might just pop into the chat where you're tuning in from. So I can see Mike saying, OMG, where is Glenn? As I say, he'll be back to you right next week, Glenn. And it's great that we've just heard from him. Thank you very much indeed, Drew. Thank you for your lovely welcome. And I can also see Mike saying, welcome, Susan. Thank you for doing this. My pleasure. Fort Myers in Florida, Naples in Florida, New York, Sherman in Texas, Virginia Beach, Belgium. Oh, fantastic. Israel, Madiville, Los Angeles. Oh, sorry, Louisiana. Apologies. Vancouver, Cleveland, Ohio, Atlanta, Dublin in Ireland. Hello indeed. And I see another familiar name there. Winnipeg. Hello, Barbara, who's also in Dublin. Halifax. Long time no see, says Paul Van Dersen. I see also from the Netherlands. Georgia, Ohio, Akron, and on and on and on and on and on. Tommy Doyle from formerly of Wexford and now in New York. Brilliant. So keep them coming in. Keep them coming in. We're only delighted to see where you're all tuning in from. Great. So, well, as regards the week that has just happened, and to be fair, the week that is happening right in front of your eyes, there obviously is one big story in mind, and that is what's going on with the retail investors versus the with the hedge fund. So what I wanted to do today is, first of all, just tell you exactly what's been going on, right? What's going on, why is it going on, and how can we determine where this might go. Okay, number one. Here is the down low, right? Really simply. In essence, a lot of people got together on a platform called Reddit and Wall Street Bets. And what they wanted to do was, as retail investors, now a retail investor is you and me buying our shares and then selling them as we would when we are simply buying stocks for profit or for profit and dividends. When you put the retail investor, when you bring them all together, they pack a huge punch. But ordinarily, retail investors don't work together in concert to achieve something in particular until this week. And then what happened was a couple of people got together and then they said, you know what? You know those hedge funds that have got a big position that is short? We're going to go after them. Now, let me explain what that is. If I buy a stock, I'm going to buy a stock today, it's $100. I'm going to buy 100 shares of it. It costs me $10,000. My intention is when that stock rises, then I'm going to sell. I'm going to sell when it gets to $120. A short is the opposite way around. I'm going to borrow a stock that I don't own. Then I'm going to sell it. In the market. And then I'm going to sell it at 120. I'm going to wait until it falls to 100. I'm going to buy it back and I'm going to pocket the 20 in the meantime. And that is what some hedge funds do, and do at enormous levels. So that's what these people, retail investors, got together and they said, you know what? We're going to find the biggest shorted stocks And we are going to go after these. So we're going to buy and 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 push up the prices. And then, of course, those who are short, well, then they're going to get into trouble. Because just imagine this, borrow a stock at $120. I sell it, the stock goes to 150. Stock goes to 160. Stock goes to 180. How high can a stock go? There is no limit. So what happens when you get nervous? Well, you have to close the position. And then what? Well, then if you close it at 180, and therefore you have to buy the stock back at 180, you've sold it at 120, and then of course you don't just lose the money that you sold it at, you also have to pay 60 extra. And that is where these hedge funds find themselves in today. So who are the stocks that they chased after? Well, I'm sure many of you know exactly who we're talking about. It could be a GameStop, of course, also AMC, and also Nokia. There's a wide variety. This is spilled into Europe as well. That became very, very clear. Now, to actually give you some numbers on this, right, I took a look around at the market today, and here is what I wanted to show you, is that number one, yesterday, more than 24 billion shares changed hands in the US. 24 billion. That is a big, big, big number. And there was also a record 57 million options contracts were traded, surpassing the 48 million record set at the onset of the pandemic. And by some margin. That is a very, very significant margin. If the previous record back in March was 48 million, like the next record is 57 million. So that will just show you the sheer extent of what happened yesterday. And it was also the 6th largest one-day VIX move since 1990. To those of you who may not be familiar with what VIX means, VIX is the volatility index. That will tell you that we had the rockiest day yesterday. It was a roller coaster. And this morning, by the way, particularly when we woke up here in Europe, what I was looking, everything was down. I had a fully red screen, red screen. And you know what happens? You know what happens why that happens? It's when there are positions put in overnight that are going to be closed. People are saying, right, just get me out here. Yesterday was a bad day in the markets for a lot of stocks. Just get me out of here. They put in their positions overnight. They're triggered in the morning, and then everything is down. Now, things recovered and things built again over time. And of course, now when I would look at my screen, and we will do a market overview, of course. Now, when I look personally at my portfolio, I'm looking at mostly green. So that it's been a really rocky day. So these are the statistics really to describe exactly what happened. Of course, there is another thing that's going on that hasn't got anything to do with what I've just been talking about, and that is there was news yesterday. And that is that economists had expected the US economy to advance by an annualized 4%, which happened. Okay, so that actually happened. But that was following a 33.4% rise in the third quarter. This is the strongest annual rate of growth in post-war history. This is in the US. I mean, for an economy to grow by a third in one quarter is quite phenomenal. But of course, we all know the backstory to that, namely the coronavirus, and also economic output advanced 1% compared to the previous quarter based on the measure used by other economies. So really, I mean, you know, yesterday was all about the Fed making their decision to keep a policy accommodative. Jobless claims did fall, but still at very elevated levels. And really, the economy didn't exactly surprise. So that also happened yesterday, in on top of the craziness that is going on. One last thing I'm going to talk about before we move in and we take a look at the market overview. And of course, please do keep your comments coming, keep your questions coming. I'm going to be here right throughout the show, right here until 1:30 p.m. today. And I would only love to hear from you, to hear your thoughts, your questions, your concerns, and so on like that. That is what I'm here to do. But I do want to answer one question, and that is that people have been asking, how can when I say one company, one hedge fund, short more than 100% of the free floating stock? Let me explain what I mean. One of the things that the hedge funds have been doing is that they have been shorting these stocks, not just shorting 100% of the stocks that are available, but more than 100% of the stocks that are available. Now, if I want to buy stocks, I can't, and when I say I might mean a hedge fund, I might mean an institutional investor, whoever I might be. I can only buy 100% of the stock out there. So how could I possibly short then 100% of the free floating stock? Specifically, free floating stock, that refers to the stock that is available to be bought or sold. Okay, so that's what I mean by free float. So how could you possibly short more than that? Well, I'll tell you. Let's say I'm a hedge fund and I borrow all of the stocks available. All of them, right? I'm going to borrow all of the stocks available. I'm going to borrow 100% of the free float. Highly unlikely I would do that. Let's say I take half of it. I'm going to borrow 50%. So I'm going to go to an institutional investor. I'm going to go to a broker. I'm going to borrow all that stock. Okay? Can I do that? Yes, I can. Then I sell it. Goes into the open market. Who buys it? Whoever wants to is the answer. Whoever wants to buy it. But the thing is now they own the stock, so I can borrow from them again. And I can keep going and I can keep going and I can keep going. I can keep going and I can literally go out and I can borrow all of the stock that's available. Sell it in the open market and go back and buy it from the new buyers. Do it again, do it again, do it again. So it is entirely possible. There have been stories flying around Twitter today and flying around the newspapers. How can a hedge fund short more than 100% of the free floating stock? That's why. They can short a lot more than that if they want to. But as we now know, the story and the big headline of today is that this is a huge issue. Now, from my point of view, I'm going to sit and wait it out. We're going to go through the market timing indicators now, and I'm going to tell you where we sit on that. But it's really something that I think is a big story to hit the markets right now. But I've been hearing and watching people say, let's take it to the moon. That seems to be a phrase that's doing the rounds, is that if you were going to take a stock to the moon, then somebody better be on the moon better and who is able to sell it. So let's just bear in mind that that is the case. You can only buy a stock and sell a stock as long as there is someone on the other side of that trade. So let's see how this plays out. And by the time Glenn is back with you this time next week, it will be really interesting to see where we are at. Okay, now let's head on in then. Let's head on into the program. Let's take a look at the market timing right now. Okay, so I'm just going to go over here. Here is my homepage. So I have cleared the homepage here. Cleared the homepage so that you can so that we can make it as clear as possible. And I'm just looking here at great. First of all, I want to say a huge thank you to Joey. Joey is our producer here at the show Trending Thursdays. Joey has spent an inordinate amount of time with me online here over the last couple of days and in preparing for today, and also he is there to answer your questions. So I know Glenn always says to him to say hi Joey, so on behalf of him, hi Joey, because of course he is based in North Carolina and I'm here in Dublin, Ireland right now. Okay, so what is going on with the market today? Well, first of all, let me just take this out here for you and let me expand it here so that you can see. Okay, let me just expand that out there now for you. So I hope that is a little bit easier to see there. Right, so as of right now, and of course, as you know, these prices are live. The S&P 500, so this is the index that looks at the top 500 stocks in America by market capitalization. So the largest 500 stocks in America, currently up 1.95%. Believe you me, I was here. I have been welded to the markets this past week. It was looking a very, very different story by this time yesterday. Also, the NASDAQ 100, and of course the NASDAQ is more focused on the tech stocks. It's actually, and it's changing in front of our eyes, of course, but it is up 1.88%. In addition, we have the Dow Jones here, industrial average. Of course, they're the big stocks in the US, 1.8%. But the VectorVest Composite is actually only up 1.14%. Now, for any of you who are new, and I can see here that there's people tuning in here from all over, both new people as well as lots of familiar names and faces. By the way, it's interesting here. Jay is asking, can we profit from this? Well, that is what tonight is going to be all about. Sorry, it's tonight in Ireland, this afternoon in the US, this morning if you're in California. What we are going to do is we're going to talk about 5 different key areas where I'm going to take you through really up and coming trends that I think will be more long lasting, where you can take a look at it. But certainly the volatility, that is something I'm going to talk to you about in my final theme. So stick with me, buckle up and stick with me. Now, to come back over here to the VectorVest Composite. So the VectorVest Composite is the way in which we look at all 8,400 stocks that are in the VectorVest system. And what I can see here is that this is only up 1.16%. Now, what this is telling me is that the bigger stocks, because of course, remember what I told you, the S&P 500 is the largest 500 stocks in the US. The NASDAQ is the largest 100, specifically focusing on tech. The Dow Jones are the largest companies. Is that it's telling us that the bigger companies are making the bigger moves today, as distinct from the smaller one. I see here Kev is saying, Glenn, how you've changed. Yeah. I think you'll notice that the main thing that's changed about Glenn right here is his accent. Yes, of course, it is Susan here from Dublin, Ireland. So you're all extremely welcome. Okay. Now, let's move on then from there. So now that we know that the indexes are all in the green and all in agreement, they're all in agreement. In other words, they're all moving up. Admittedly, though, it's clear to see the bigger stocks are making the bigger moves today. Let's go over here and let's see if we were going into the market today. And I have had a couple of options that have expired worthless a couple of weeks ago. So I am ready to go back into the market. So if today was the day, if I was going to go back in today, what is VectorVest telling me specifically from the point of view of going into the market right now? It is telling me that it's quite neutral. VectorVest does not advocate buying stocks at this time. And by the way, I can simply tell that from reading this. Again, let me just pop it out here. Let me just pop it out and just so you can see it here. Right, so I can tell that obviously from reading here. Even if I couldn't read it, look here at this is firmly in the yellow zone. So VectorVest is saying it does not advocate buying stocks at this time. There is a whole load of shakiness going on right now in the market that is just trying to find its way. That's exactly what's going on. But even apart from that, I'm going to close that. Here is an even bigger indication. Okay. And this is what has been happening. And here's where I'm just going to spend a couple of minutes here. And then we're going to get straight into our themes and our stories. This is the underpinning of how VectorVest can make it a decision like VectorVest does not advocate buying stocks at this time. Look what was going on up until before this week. A lot of green, right? And this system is based really simply on green, yellow, and red. Okay, so if you see red lights, that is stop. Really, you need to be out. You need to be very, very careful, either not to go in, or else you may be looking at a short position if you're so inclined, or taking positions out, etc. That's looking at it from a very short-term point of view. Then, in addition, we have green, which is the opposite. Of course, green is, yep, market is in a good place. It's quite welcome right now if you want to go in and take a long position and so on. But yellow is actually more difficult to interpret. So when you see yellow, you see one of two things. Either the trend is weakening or it's reversing. It's weakening or it's reversing. And you often don't know which one until it's finished. Now, at the moment, I can see a lot of yellow here. And the yellow means that the price is in disagreement day over day and week over week. It means that while the price might be up since last week, it's down since yesterday. So that is that's what it refers to. So day over day and week over week is in disagreement. So the market might be up in comparison to last week, but it's down in comparison to yesterday. And that's when we kind of say, okay, we've got a yellow light here. So is the trend, the uptrend that was previously there, is it weakening or is it reversing? Right now, I can tell you what I think, but right now the market is still trying to make up its own mind. Now, in addition over here, I can see what the MTI over here, the MTI is the market timing indicator. If you were here last week, and loads of you can be, of course, you can be here every single week, and all of the Trending Thursdays are all on YouTube, like this one will be. So you can go back and check. But Glenn was talking about the fact that the MTI was feeling, as he put himself, toppy. And now, by the way, I have to say, I'm a great fan of Glenn's. And one of the things that I love what he does is when he has one of his Glennisms, when he says, holy smokes. Now, he didn't do that. He just said it was a bit toppy. So he wasn't overly excited about this. And I can see why, is that the market certainly looked toppy, as he says. It was looking like it was heading, hitting up against, it was certainly hitting up against some resistance, all right. But it certainly didn't look like it was getting ready for a dramatic fall. And that is exactly what has transpired, is that we can see that the MTI over here has gone from 1.7, 1.69, 1.67, and now it's at 1.6. And look here, look at the MTI today. Just look at it here. The market has been open now for quite some time. And look at it. It hasn't really changed. It's not really budging at 1.6. So when I'm looking at my portfolio, I'm seeing big changes of certain stocks. I'm seeing really big changes, but the stocks that we mentioned earlier, the ones where they're being particularly sought out by people from Reddit and Wall Street Bets. But really, the market right now is just saying, we're holding our own, and it's not telling us which way that it's deciding to go. So that is why when you look over here, quite simply, the color guard is neutral. So is today the day that I will be going into the market? Will I be going in right after this? The answer is no. I will not be going with my liquid balance that I have right now, as I told you, as a result of my options expiring. I do have a liquid balance there that I'm ready to go again. Now, I'm going to talk to you about what I'm looking at. I'm going to talk to you about my shopping list. But right now, the market hasn't decided which way it's going to go yet. And as a result of that, because the color guard is neutral, I am staying where I am and waiting to see. And I was watching very closely this morning, really closely in Europe, if we were going to get red lights, and to see then if it would follow through here to the US. Okay, now at this stage, I'm just going to pop over here to just going to check in here with Joy. Of course, he can't sit right beside me because he'd have to travel very far. And of course, we know that we can't do that right now. So instead, what I'm going to do is I am going to pull up my Teams here, and I'm just going to check in with Joy to see if there is any particular questions or any comments that he wants me to address. Also, can I tell you? Okay, great stuff. Thank you. Can I also mention to you as well is that yesterday VectorVest did post a video on all that's going on with GameStop and with AMC and with everything else. Clayton put together that video. So Joey, can I just check in with you? Would you mind, please, just popping that link into the chat so that then if you could, then anybody who wants to go and check that out, they can. All right.
Hey guys and gals, Steve Chappell here. It's that time again. Time for another blockbuster YouTube event. In the spirit of both Valentine's Day and the new legislative climate, our next hot stock picking panel is going to be called the 7 Marijuana Stocks to Love or Leave. So buy or avoid like the plague. We'll be coming to you live right here on YouTube February 3rd at 2 p.m. Eastern, and we hope to see you there.